Welcome back to the Kelowna Real Estate Podcast. I'm your mortgage broker host, Taylor Atkinson.
And I'm your real estate agent host, Matt Glenn, coming to you live from the renovation zone, which is my basement. This behind me, people that are watching, is not my attempt at contemporary art. Just drywall dust.
Drywall dust. I love it. Yeah. How's it going over there?
It's the longest. I swear cities have been built faster than my basement suite's been renovated.
You're on time and on budget, like all renovations?
Yeah, both those things. 10x. It's getting there. The end is nearing.
I mean, it's a value add for your clients. Like, you know, it's nice to have a real estate agent that has done renovations or gone through like permitting process and can kind of understand some of the pain points. So
yeah, we've done a lot of renovations. Like we've done kitchens in both of our houses. We've done bathrooms. We've done it all, but this basement suite has been a project here. So
it's harder like when you're living in the home, but it's not really affecting your living conditions and you have kids where it's like, like when you have no kitchen, it's like you need to get a kitchen right away, right? So like it's just motivation. But when you have a basement that you don't really use that much, that's under renovation, the end game is just to finish it and you have kids, like, the motivation factor for me is just not huge. Yeah. Kind of sucks that it just takes forever. Like now I just want it over with. And you guys are converting it to a suite, right? A basement suite?
Yeah, we're adding a 2-bedroom legal suite in here.
Yeah.
So, yeah.
Yeah, I mean, your kitchen in the main is awesome, but it's like that was pre-kids and, it's like something that you have a lot of passion about because you're going to be using it like immediately where a basement suite, you're like, yeah. Exactly. Well, good luck, man.
Yeah, thank you. Going to need it for sure.
Yeah. Speaking of luck, wearing a Blue Jays hat today.
I know. I've been noticing. I like the repping.
We're heading down actually tomorrow to see Game 4. So they need some luck at this point. They're not playing as they should be. But
yeah, I don't think they need that much luck. They just need to play well.
They just need to start hitting the ball.
Yeah, exactly.
So I'm confident they'll win 2 in Seattle. And then they'll bring it back to Toronto for Game 7.
Yeah, no, I agree. I would agree with that for sure.
Okay, well, we want to jump into the show we recorded with Patrick Bobyn from Pushor Mitchell and Kelowna Chamber of Commerce. So with Pushor Mitchell, he's a lawyer there, partner, and then Chamber of Commerce, he's vice president on the board. I work a lot with Pat and he is awesome. And I think one of the big things that I want to communicate, and we've talked about this a bunch on the show before, is like you really want a team of professionals that are on the same page, they communicate with each other, like they're working collectively to get the job done. And we have some great lawyers in town to do these transactions. But I've worked with Pat a ton and his team's awesome. I can't say enough about them. So just find someone you trust and you feel is going to get the job done, because you do not want things blowing up at the last minute and somebody's law firm not being able to handle it. So maybe you can speak to that as well, because I know, times get a little stressful at the end of it.
Yeah, like a lot of times, like Taylor and I, we're working on one together right now where it's going to close at the end of the month. We have a sale and a purchase in the same day. And like just having someone like Pat on there to stick handle it and just make sure that the lawyer isn't holding up the issue on closing day when there's a lot of moving parts. And like all the stuff that goes into it before that, I can't say enough. I totally agree with you. Having a great team around you just makes the biggest difference. So I totally agree.
Yeah. Pushor Mitchell's a huge firm. Like they do everything. They've been in Kelowna for 50 years or something. And they're involved in the community as well. Like, for Pat to be in with the Chamber of Commerce, like working with small businesses as well, kind of has his finger on the pulse, but brought up some awesome points near the end of the show too, like pretty interesting suggestions on clauses or how to structure deals. So I think well worth the listen. You guys are going to enjoy the show.
And his knowledge with the Kelowna Chamber of Commerce too is super interesting. He's wears a lot of hats, more hats than you and I are wearing right now. And,
I don't know how he has time for it, man. Like he's got 2 young kids as well. His wife's a lawyer who's an amazing lawyer as well. They're doing great things in the community, but can't say enough good things about Pat. Like he's just been awesome to work with. So
episode was awesome too. So you guys will enjoy it. All right. This episode, like every episode, sponsored by Century 21 Insurance Realty. We've just acquired more property managers. So we are growing property manager in a big way there. So we are growing agents, property managers, geographically. We're everywhere. So we're on brokerage on the upswing. So if you're looking to join a brand that's heading in the right direction, Century 21 Insurance Realty is probably the place to call. Give me a call if you are a buyer or seller looking for an agent, or if you're an agent looking for a brokerage, Century 21 is one for you.
Okay, Patrick Bobyn, it's been a long time coming trying to get you on the show, but glad we could sync up schedules. How are you?
I'm doing well. Thanks, Taylor. Matt, it's great to be on here, and it has been a long time coming, but really looking forward to it.
Glad to have you on.
I think good, busy guests are hard to get. So yeah, you tick the box. Maybe we'll just jump straight into, you kind of have two roles that we wanted to discuss today, and one is on the Chamber of Commerce. So can you kind of give us a high level view of what your role is there and what is the Chamber of Commerce?
No, absolutely. Great question in that regard. And for those who don't know, Kelowna Chamber of Commerce, business community is really what that is. And so the chamber is where businesses of all sizes, from sole proprietorship to hundreds of employees, can be a member in terms of what the chamber provides. I would say are three main things: advocacy, benefits, and connections. And so depending on what a business is looking for, whether it be all three or one of those things, the chamber provides that. Where our intent, our vision is to be the catalyst of the business community. And so my role, I'm a director. It's a volunteer board, but typically there is a lawyer or lawyers on that board. We actually have three right now, two practicing, the smart one's not practicing. But something that my firm, Pushor Mitchell, has been involved with for a long period of time. We typically have a lawyer on that board, and so it's my turn right now.
Like, you must have your finger on the pulse in terms of small businesses in Kelowna. Like, what is the current vibe? Are people worried economically? Are people thriving? Do people see opportunities? Like, what are the discussions you guys are having?
No, it's a good question. It really is something that it's not a one size fits all, but a big part of our model is we intend to be the voice for the business community. And so really, I'd say a big thing we do is listen. We always say, what is keeping you up at night, to our members? And we have over 1,000 members. So you think of the business community. That impacts a lot of different sectors. I think what you see right now, and in a lot of ways not surprising, but it's just that business uncertainty. You look at the States, what's going on down there, and the ripple effect that it has up here. You look at rising cost. A lot of business owners, big and small, are saying, my margins are shrinking and shrinking and shrinking. Expenses are going up. How do I keep the lights on going forward? So while there is a lot of optimism and there's a lot of great success stories in this town, I do think our business community is still very much in that cloud of uncertainty in terms of going to 2026 and what that looks like going forward. And so the chamber's role is really going back to those three things: advocacy. What are the issues? What are keeping our members up at night? How can we relay that to the proper channels? Is that a municipal issue? Is that something that we should be going to the federal level, proposing a policy or trying to get a distinguished speaker in to talk about that issue? Those are all things that as the chamber, we try to facilitate.
That's awesome. And so I guess in the last couple of years, I'm just kind of assuming, but have we seen kind of tourism go down, forest fires, Airbnb, stuff like that? Like, is that what is also impacting small businesses, or do you guys have some of that data?
Yeah, there's a lot of good intersections. So Tourism Kelowna is really focused on the tourism side of things, but we very much work hand in hand. And there's a lot of issues that are relevant for their members and our members. And we also share a lot of members, as you can appreciate there in that regard. So I think certainly you look at this past year, and especially with the States per se, and that's a big part of our tourism, there was concern there. Now, obviously, I think on the flip side, that did promote cross jurisdiction in terms of Canada and Canadians coming out this way, which is good. But like you said, there's always barriers we have to consider here. There's the short-term rentals, which is a big part of our community. Our mayor actually spoke about that a couple of weeks ago at one of our chamber luncheons, and hurdles in that regard. And we're always asking, what more can we do to promote tourism within the city?
Have you seen any impact of people trying to buy Canadian, or have you guys made any push for Inter-Provincial business, improving that or anything?
You kind of hit a buzz topic there. And so one of the things the chamber does at both a provincial and a federal level is promote policy. So chambers throughout BC once a year will go to an annual general meeting of BC chambers where certain policies can be promoted. And that actually happens at the federal level as well. It actually happened last week, where our president and our CEO went to Mississauga and we're at the federal level there where they can promote certain policies. And so one of the ones that we have been pushing for a long period of time is that inter-provincial cross-border trade. And obviously the barriers that we see, you think of the wine industry per se, or alcohol in that regard. And so I think we've been hammering on that in addition to many other chambers and entities, but that's been something we've been trying to push for years. And obviously with everything happening in the States, It does look like there's been a little bit of movement there. Now, obviously, at the federal level, you got to get 13 provinces and territories on board there. But we do feel that locally, that's been an issue that we've been on top of and something we've been quite vocal about. And hopefully we're starting to see some movement there.
Yeah, you think it would have happened like at a much more rapid pace. Like you think, tariffs would have been the catalyst to like get inter-provincial trading going here, but it hasn't come to fruition just yet.
No, I mean, again, as much as it's something that we advocate for at a local level in terms of a policy, it does work its way up. I think right now it's really between the federal level and all your provinces trying to figure out how to make that work. I'm not a politician by any means, but I think it can be appreciated that a lot of moving parts there. But I think there's a general consensus that it's something that has to get figured out. It's just we got to get there.
Yeah, you brought up short-term rentals. How has short-term rentals affected the business community? Like we had Casey Grable, I think this episode will come out either before or after yours, but he was talking about how it affected his business in kind of outside the box way that we don't hear as realtors and in the real estate industry. Like for the business community, like have you heard an outcry or like any kind of pushback from the short-term rentals that was affecting the businesses?
Matt, I think it's one of those things too, is like you said, it's always the ripple or the unintended consequences or how that impacts other industries. We obviously look at tourism again and how, especially in the summertime, short-term rentals provided an alternative avenue for accommodations, which obviously I would say has a good impact on surrounding business, whatnot. And again, as a chamber, we also have to appreciate that, we have many members who are hotels or other forms of accommodation. Yeah. So you're trying to find that balance between all the various considerations per se. But another avenue is, short-term rentals at time would provide other accommodations for work reasons, whether they're here for a certain period of time to do their job or whatnot. And so with the restrictions we have, that does add another hurdle on that end, which can have impacts from an economic perspective as well.
Like, because Casey's episode, he was talking about his advice he's given other restaurateurs is like more focus on the locals and like have more of a solid business rather than kind of aiming for the summer boom because you just may or may not be there. Have you heard about that from any other businesses? Like obviously he's a restaurant guy. Anybody else affected like in that kind of way that you've heard of?
On our end, and I'm kind of wearing my my legal hat as well in terms of just the businesses I advise per se. Kelowna obviously in the greater Okanagan, a lot of the focus is on tourism, but year round, a lot of those issues don't go away. And so I know the Chamber is a big proponent of shop local and contribute to the local economy, not just in the 4 summer months, but year round. I think back to your question there, it's definitely something that impacts us year round and on multiple levels, including the restaurants. Absolutely.
Do you see the Chamber like when everyone's profitable and economy's good on the small business side, does that correlate directly to like you guys doing more transactions and closing on the legal side, like real estate's booming as well? They kind of go hand in hand, or is there any connection between those two?
I think, obviously a good economy is good for all. Obviously on the, the Chamber end, we want to see business thrive at all levels. Our main viewpoint there is if business is good, that's going to have a ripple effect on various professions per se. I mean, look at the 3 of us in our professions. As real estate goes up, it benefits all 3 of ours. And so I do see that here. I mean, when you look back to COVID or times of uncertainty, I think on the transactional side, you do see a bit more creativity per se. Things like vendor financing or other ways of potentially getting deals done if you have a motivated buyer and seller. But certainly, if the economy is good and business is doing well, that definitely is going to have a positive effect on the legal side from a transaction point of view.
Maybe to kind of wrap up on the commerce side, how do people connect with you, small business owners, or maybe not you specifically, but how do they get involved in Chamber of Commerce and what does that look like?
The Chamber, it is a not-profit organization. So we do have a small team led by our CEO of George Greenwood. And I will say our team is small in number, but they all punch well above their weight class. The work they do on a daily basis is unbelievable from an operational perspective. And a lot of big events that we host, whether it be luncheons or educational events or speaker series, our big event actually at the end of this month is the Business Excellence Awards, which is always a fantastic night to really celebrate local business. There's over 16 awards that are presented, and I've been going for a couple of years now. That event is always so amazing to see the type of business out there. The awards are quite diverse in terms of the categories. Typically what happens is your finalists, each one for each award, it's a long night, but you do get a video overview of what each business does and their story, their individual story. It's inspiring actually just to hear the different stories and the different successes our community has in that regard. Those are our operations. And then from a board governance model, myself, in addition to other directors, were there to really guide the chamber from a governance perspective. And so I'm the vice president this year. That's certainly something that if people are interested, they have just general questions on how the chamber works, or if they want to get involved as a member or as a volunteer, I mean, they can certainly reach out to me or just reach out to our CEO, George, in general through our website.
Awesome, man. I love it. Yeah. And that is one thing like I see in Kelowna, and maybe, we live in a bit of a bubble and people aren't so aware, but like there are some awesome entrepreneurs in the Okanagan. Is such a good community that way. So yeah, it must be exciting to see them grow.
I will finish with one more thing on the chamber, and this is, I'm going to throw a question at you. We're celebrating a milestone next year as a chamber. How old do you think the Kelowna Chamber of Commerce is?
25 years?
I think closer to 50 years.
Next year will be our 120th anniversary.
Damn. I was going to say 75, but then I heard Taylor's answer. I was like, whoa.
I know. I didn't want to go too high. I said 125, not 25. Yeah. That's incredible.
So, yeah, I mean, you look at that. So it's been around in some shape or form for a long period of time. Obviously, over that, it's had to adapt and change, and in terms of providing value to its members. But, as a chamber, we're very excited for next year. Already, there's a lot of talk about the different ways we can celebrate quite a significant milestone, so to speak.
Yeah.
Congrats. That's awesome. I don't know how you have time for that and legal and couple kids like you're
podcasts.
And podcasts. Yeah, that last one's harder. No.
Yeah.
Well, you know what it does? Like, I mean, I hinted earlier, Pushor Mitchell, where I'm a partner at, it's only been around for 53 years, I believe, but has had a long-standing relationship with the chamber. I mean, it does go hand in hand. We don't just share a parking lot, as I like to say, but many lawyers who've served on the board, or I believe we've had 5 or 6 past presidents that have led the board in that regard. And especially as someone, I coin myself a business lawyer, I think it goes hand in hand. My expertise definitely contributes nicely to a governance board. But at the same time, in terms of advising my clients from a business perspective, to have that sort of insight as to really how all the levers work from a chamber and a municipal standpoint definitely helps.
Yeah, that's awesome. On the legal side of things, before we put you in the hot seat and just fire questions at you, do you kind of want to let us know any current legal updates or anything in the pipeline that you might want to fill us in on?
No, absolutely. And so the overlap we all have is real estate is part of my practice. I advise businesses really at that commercial element, but on real estate side, both residential, commercial is a big part of my practice. And so we're always seeing what's changing or shifting in that regard. And 2 things I think I'd raise, and I appreciate you've had a lot of great lawyers on in the past, in just terms of a timestamp. And here we are in October of 2025. A big thing actually is more on the administration end is compliance. And so title insurance, which is something you see typically in all transactions now. It's something that lenders require as part of any sort of financing per se. The title insurance, which really ensures title to the property, we have to get various information on the client, individual information. That's now really a FINTRAC regulated element. And so when we provide that information to the insurers, it's not just to get the insurance bound per se, but now the title insurers have to relay that information through FINTRAC. And so I think as it can be appreciated, it's something that is adding on another administrative layer, so to speak, another item that we have to address. And so part of our role as legal counsel, which gets the back end of these transactions as we're getting ready for closing, is you just want to be proactive in terms of getting that information and making sure that's not going to be something that potentially holds up a prospective closing.
So is that new, title insurance? Like how new is it?
As of October 1st, 2025.
Okay, interesting. Would that affect realtors? Like how would that affect a realtor?
Typically, my understanding, Mac, the realtors are not really involved with the title insurance aspect. I mean, obviously, you have to have your own hoops you have to jump through from an ID verification standpoint. I think the big thing is it really does impact the lawyers because we're the ones that work directly with the title insurers to get the policy. Given now that is a piece of personal information that's now going to be shared with a third party and shared with FINTRAC, it's something we actually have to get approval from our client right off the bat. And so it's something where I think in the past, you weren't as concerned about addressing that item right off the bat. It's definitely something that's more at the forefront now because, some transactions you don't have a lot of time, turnaround between condition removal and closing. And you need title insurance in place for closing if you have a lender.
Yeah, interesting.
I speak for all mortgage brokers. We apologize on tight timeframes. Especially this fall, you get certain promos by certain lenders that you have to close within 30 days to get specific rates. And,
Yep.
it puts the legal side under a lot of pressure because, we're constantly trying to push to get instructions sent to you guys as soon as possible. But there are conditions that, we have to meet before they send those instructions. But if you have, piles more compliance paperwork like title insurance, that's why you guys really need that like 10 business days, before closing, right? So,
yeah. And like you said, Taylor, I mean, every transaction is different in terms of timeline. Sometimes there is certain things that will dictate the timeline per se. I mean, I would say a lot of the information we're getting is information we'd be getting in any event. A lot of the compliance over the past few years, and whether that be the Law Society, ID verification requirements, the disclosure from a transparency perspective, these are all things we'd be collecting in some shape or form anyway, but it's just now that extra what we're doing with that information. And that's not to scare clients in that regard, but it just is part of the process now in terms of doing a transaction.
Yeah. What about GST? You got anything interesting there for us?
Everyone's favorite GST, right? And in terms of whether it's applicable or not. One thing that's sort of come up, it's not here yet, but back in the spring, there was actually discussion of a new first-time home buyers GST rebate. And so typically on new builds per se, there is GST payable. PTT is not payable at certain times, property transfer tax. And again, not a politician, but part of the new Carney coming in, whatnot, there was some proposed legislation about first-time home buyers where really between $1 and $1.5 million new homes, there could be a prospective GST rebate if you are a new home buyer. Now, that is not in effect yet. So if you are buying a new home today and you are a first-time home buyer, you are paying GST on that. But it is something that has been proposed with the House of Commons. And theoretically, if it does get passed at some time, I think that would definitely help be a catalyst in terms of getting first-time home buyers into the market, because obviously GST is a part of the consideration in terms of what your budget is per se.
So I guess this is a question for both of you, but why would they call it a rebate and not just an exemption? Doesn't that change lending? You get paid and then you get paid back. I don't know what that does if you have an insured mortgage, like Taylor was saying a couple of seconds ago. It's thrown a lot of confusion of us on how do we do this. So I have some new properties listed. We know that it's not in effect yet, but it will be coming at some point, or likely will. Do they have to come up with the GST, pay it, and then just get paid back in the future?
Matt, you nailed it, right? I'll say my favorite legal answer is we don't know yet. Now, it depends on the legislation and how it works, but you're right, because a rebate, in essence, is really you're paying it and getting the money back. There is a first-time home buyer's rebate right now. It's quite a bit smaller on new build homes, but that's how it works, is you are paying the GST up front, typically, and then you get a rebate after. Would that work in this case? I mean, again, you think if we're looking at homes up to 1.5, that can be quite significant GST. And so if the whole thought process from a policy standpoint is to try to get more people in the market, I'm not so sure then paying it up front and then getting a rebate afterwards actually.
So people don't have the money up front. This is what you're trying to help.
It should be an exemption for sure. From a lending point of view, generally lenders don't finance the GST anyway. So it wouldn't be the lender funds it and then you're getting that cash back as a client. You have to come up out of pocket.
I thought lenders did finance GST. They don't?
No, we typically don't see it unless it's incorporated in the purchase contract of just the price itself.
Oh, so it's the seller pays the GST, then you'll finance it?
I mean, Pat, you've seen way more transactions than I have. Maybe I've got this wrong, but the ones that I've done with GST, the client has to come up out of their own pocket. It won't be facilitated from the mortgage.
Yeah, I mean, what will happen is from a more of a mechanical perspective, when we're meeting with a client, you look at a statement of adjustments, there is a separate line item for GST in that regard, whatever it ends up being. And so that is added. I mean, obviously we factor in whatever the mortgage proceeds are, but that is certainly an item that is added on top in terms of what the ultimate breakdown of cash that a client has to bring in is.
It's like property transfer tax, right? That's not going to be financed from a lender.
I knew property transfer tax, but I always thought GST was financeable. So yeah, I learned something new here.
So recently I have seen a few times as you're seeing motivated developers that are trying to move inventory is they still have to collect the GST, but they'll be now offering a credit, a buyer's incentive, call it what you will, that coincidentally equals the 5% value of the purchase price. We have a line item for GST. That GST is getting paid to seller per se, but then they are getting a credit, which washes it out. That is something I've seen a few times now quite recently in terms of developers trying to move product.
Yeah. Hypothetically, what does a transaction look like? A client gets an accepted offer, they send it over to you because hopefully every real estate agent puts in a condition for legal review. You open up a file with a client. What are kind of the next steps?
You nailed it there, Taylor. I mean, ideally there is a condition or a due diligence period that has a legal element to it. And really that is our opportunity from the legal end to really look at contract, make sure we're comfortable with what that looks like. Look at title, make sure we're comfortable with what title looks like. And the way I like to frame it to our clients are you legally informed? Can you make a legally informed decision to move forward with this purchase if you so choose? And so that's really our task to really, are there any flags, anything we should raise? Do we have all the information? And so that is our role during the due diligence period. Typically the client is also at the same time doing their inspection, getting their financing in order, making sure they can get insurance on the property and any other sort of asks that go with that. And so ideally we have that time frame and then we work with the client to then provide the information. They decide then whether they want to move forward or not. If they do move forward and they remove conditions, or in the alternative where they didn't have any conditions to deal with and it was an unconditional offer, really at that point then we shift from the due diligence aspect to facilitating the close. And so what has to be done to get a closing in place? Is there a lender we're working with in which we need instructions and we're looking at conditions for financing and whatnot? And then working with the client, getting that personal information, preparing the purchase documents, finalizing a figure so they know what they have to do leading up to closing.
Yeah. And I mean, during that process, when we get a commitment letter, we usually forward it to our legal teams that we're working with and say, hey, expect instructions shortly. But to go back to the purchase contract, any pro tips on putting in little clauses, whether that's like a holdback, like where do holdbacks come in place, like at what kind of monetary value? Yeah, just kind of walk us through some of that stuff.
No, it's a great question. And looking at you there, Matt, in terms of your world a little bit per se, but the standard form contract, I think, does a good job of really getting the general essence of what a purchase transaction should look like. Of course, it's always those additional items there that we have to put some thought to in terms of what that looks like. And so I think the one you raised, Taylor, was a holdback. And, typically you see a holdback if there's some sort of action step, usually on a seller, for something to be done to the property. And really the incentive is of that if said thing is not done by closing or by a period of time after closing, money is held back as sort of a mechanism to ensure that that thing is done. And so that's where you see holdbacks is, does something have to be replaced? Does something have to be repaired? Is there an outstanding permit or something that is really needed for the buyer to really fit their intentions of what this property is and really what the transaction is? Unfortunately, holdbacks, the essence makes sense. We're holding back money until something's done, but they get incredibly technical because unfortunately what happens is deal closes, holdbacks in place. And then what happens if seller doesn't do what they say they're going to do, or seller says what they're going to do and buyer doesn't think it was done properly? And you really have nothing to point to in the contract or the holdback language. And so there unfortunately are a lot of disputes or ongoing issues with holdbacks if they're not drafted properly or really just have fully encompassing consideration for how that process is to be played out. So definitely I tie that back to legal. Like if we have a due diligence period and that's something the lawyer is looking at as part of the contract, absolutely. If there's holdback language, part of our role is to think that through and sometimes wear our worst case scenario hat, make sure that holdback language would address that properly.
You said something there that, it's kind of the expectation, like the seller thought they did something to the right standard and the buyer thinks they didn't. Like unit has to be professionally cleaned or carpets have to be cleaned before, possession's taken over. Like what is the recourse there? Because really it comes down to the buyer comes in and says, I don't think this was clean. Show me a receipt. And then they show them a receipt. And then like they're in this, I'm going to take you to small claims for $400 kind of thing. Like obviously you guys are probably not going to get involved at that level. That's kind of like where the buyer and the seller agent, put their heads together and see what they can resolve. But are clauses like, a unit being professionally cleaned? Like, is that reasonable to put in? Like,
I would say definitely reasonable. And any of these clauses that do get in the contract, that is evidence to a court, if it ever goes there, what was the intention of the parties as it relates to the transaction, specifically an item in the contract, whether it be the cleanliness of the home or otherwise. But it's something that, on the buyer side, you do have to advise your clients to a certain extent as you get to closing. And obviously there's terms in the contract and rights and obligations of both sides. And there is a discussion with clients that this is what you're legally entitled to. Contractually, this is what is supposed to happen. But what happens if it's not? And so first off, for the vast majority, I would say 99% of these terms, they are not material in the sense that you cannot back out of a deal if the home is not professionally clean when they say it's going to, or there is some damage found in the property. I mean, material, it's got to go to the essence of the contract. Are you still getting the home you said you were going to get, or the contract contemplated you getting? And so that is something that client has to understand, is that if you do find out about an issue, whether before closing or on the day of closing, it's not material. It doesn't give you an out. You can't not close on that basis.
A lot of people do walkthroughs day before closing.
Yeah.
And like you just said, even if they walk through and the place is not clean, they really at that point are in the same position then as if they were a couple of days later to ask for money off. Or
they are. I mean, the walkthrough can always be a good thing to, like you said, you can be proactive in that regard to see what are we getting into here as we get to closing. And sometimes, that can lead to discussion between counsel as to, hey, it's not clean. Contract says your client will be in breach of a term. Can we negotiate a holdback at that point? Is this something that the seller is willing to engage in that regard? But if not, if there's a refusal, there's a rejection in that. I mean, ultimately, you're going to close on a deal, and then it's up to the client, the buyer at that point, if they want to pursue a remedy. I tell clients, ultimately, you're going to have to decide how much time, money, and emotion you want to put into this. I mean, so some clients will pursue a $300 cleaning bill. It's on principle and something they're comfortable pursuing through small claims, and they're fully entitled to do that. Other times, it depends on the price tag. If there's water damage that's discovered once we're in there and it was clearly contemplated, or it was a misrepresentation that could cost tens of thousands of dollars, then obviously there's potentially more of an appetite to pursue that through legal means. And so every client's different. But I think part of our job as part of the closing process is just to be very clear of how that works. Because I think, to your point, Taylor and Matt, there's sometimes this, unfortunately, as much as we wish we were the Harvey Specter or the Bulldog, we can't just magically make the place clean and they're going to pay for it on closing, for your example there.
Yeah, it's tough because we make these perfect contracts and we add everything in there, but not a lot of teeth. There is for the bigger things, right? Like you mentioned, there is for sure. But for the smaller things, there's not a lot of teeth behind them.
And you assume that, parties are going to work in good faith. There actually is a common law doctrine of courts have looked at this in terms of parties have to negotiate and engage in a transaction in good faith. And sometimes that comes up too, and they're going to say, well, I'm going to go after the other side because they weren't acting in good faith. And that can be appreciated. But, again, the practical element of that, and Pushor Mitchell, we're a full service firm and we have litigators who can help. But, a bad faith argument, you're looking at 10 to 20 grand minimum just to start that claim, right?
That's what I mean. So unless you are feeling capable enough to go to small claims yourself, what's the dollar figure where it even makes sense to even do that? Because even if you do it yourself, it's a time commitment, emotional commitment. You got to learn the court system.
Well, even if you win in small claims, then how do you then collect?
Then how do you collect? Yeah.
It's just an ongoing thing forever. I think the point of the contract from where I stand is two people communicating expectations, right? And if one person doesn't kind of follow through with that exactly how the other person doesn't want to, you kind of take it on the chin unless it's, a bigger line item, obviously.
I think you nailed it there, Taylor. It is. And I mean, we almost all sound a bit jaded here talking about the process, but I think circling back to really our role is just to ensure our client understands that process, the pros and the cons. And I mean, ultimately they can decide how they want to go forward if that situation were to arise. And obviously with good advisors, with the realtors, if they can identify an issue as part of the initial contract stage, and I'm going back to that holdback language, that's something that's always good if the lawyer can get involved in that too. And you can kind of work through those different iterations of what could happen and making sure that the client is protected there.
From a realtor perspective, it's just about setting expectations. If you're going into a house that is just a dirty place and they've lived there for a long time, you just have to tell your buyer, their version of clean is not going to be what your version of clean is. So even if it gets clean, you're probably still going to want to get your own cleaner there. Right? And all those kinds of things. For realtors, basically our job is to make people agree. We have to some compromise and negotiate and get everything to get people to agree. But if they don't agree, I guess it falls on the lawyers and the litigators after that.
You nailed it, right? I mean, we're here to try to facilitate what the parties have agreed to, but intentional or otherwise, things happen. I mean, unfortunately, one that is, I'd say, more on the extreme side is one of the seller's main obligations when they convey a property pursuant to the standard form contract is they will provide clear title. That means any financial encumbrance or otherwise will be discharged.
Yeah.
Now, as much as they are contractually obligated to do that, there are some rare circumstances where that actually does become an issue and they financially can't. And now they are in breach of their own contract to which they said they're going to do. And that's something you have to deal with. And so, you don't see that typically when there's one mortgage on title, but sometimes you pull a title and there's liens and judgments and multiple mortgages, and you sort of get a sense. And again, the conversation there to a client is contractually, seller has to do that, but there is a possibility that this could be an issue.
Yeah, well, and that's an interesting point, especially in the last couple of years. If you bought in 2022 and you wanted to sell a year later, could be short on that for sure.
Absolutely, right. I'm not talking the foreclosure aspect where there actually is a lender that's foreclosed, but I would say the seller's very close to that. And now they've come to the closing, and financially what each charge holder is saying they need to clear title. You're counting the numbers and going, well, we're not going to get there. And so that's a tough one.
Yeah.
It's funny too with as a realtor, again, you go to sell a property like that. Obviously this very rarely happens, but I'm sure will happen, especially in this market. But you go and they might have only the proceeds to pay out the mortgage and they don't have any proceeds to pay the commission or anything else. And it's just you basically took a listing where they just cannot pay you, another the thing. I'm the buyer's agent too. Right. So both agents are kind of.
Well, in that regard, then do you do a legal review for a seller? And is that part of that as well to say hey, we're going to pull title and can you provide a current mortgage statement? You're getting ahead of that before subjects are removed from the buyer. Yeah. Mm-hmm. Okay.
There certainly has been circumstances where we're providing a due diligence review or review of a contract to a seller. Often realtor has put in a seller's legal condition, and usually because there's some other strange thing going on, and they want to make sure it's kind of a fail-safe. Often we're getting the sale contract after conditions have been removed, and really it is binding at that point where we're saying,
hey, the seller for sure,
you have to do this, right? Yeah. But I've said to my clients and the realtors I work with that, even if the deal is conditional, we're on the seller side, send it to us. Let's make sure there's no conflict. And just, is there anything that we see based on a quick review just to make sure that there is no surprises at closing, which I think is what we're trying to avoid there.
Yeah. I want to ask one more question, and this is hopefully more to help the conversation with real estate agents and mortgage brokers and lawyers so we can all be on the same page. Do you want to talk a little bit about price reduction and credit at closing? Because, I get this not often, but say 1 out of 20 deals. And I just had it, a week ago where Scotia underwriter called me on day of funding and was like, hey, why is the purchase price, $5,000 less than what you originally submitted? I'm like, no idea. So I have to reach out to the real estate agent and say, found out on a home inspection that the furnace was bad. So we did a price reduction. Well, now everyone's scrambling last minute, and it was okay on that deal because the down payment was, I think 30%. So we're not on that border of insured or uninsured. But how does that look in your terms? How much of a pain in the ass is that for you?
No, absolutely. And it really is something that almost touches all parties here, and from real estate agent to broker to lawyer there per se. I mean, on our end at the back end is obviously we have a contract that we look at, and a big part of that is purchase price. What do we have to factor in terms of crunching the final numbers? If something happens, and to use your example, price reduction is where parties have agreed that the purchase price has gone down or up. It's a reduction, it's gone down. And, that matters for a couple of reasons. Number one, from a purchaser perspective, you pay property transfer tax on fair market value. And so if your purchase price is $1 million, you are paying property transfer tax on $1 million. You do not factor in the adjustments, so to speak. So utilities and taxes and things like that, you factor in for the sake of closing. But from a fair market value of what that property has conveyed for, the purchase price remains. And so if you reduce the purchase price, you are reducing how much you pay from a property transfer tax perspective, which is beneficial for a buyer. However, that can have negative impacts on what you've been approved for from a mortgage, because part of the lender's aspect is, depending on the lender, they're going to have certain asks or requirements. And it does happen, Taylor, to your point, that certain lenders will say, if there is a price reduction or a change in price, we must know, because that might impact the loan to value ratio or what they're looking at on their end. And part of, in a residential conveyance, as lawyer, we act for buyer, but we also act for the lender in terms of registering that mortgage on title. And so we are obligated, if we're aware of a price reduction vis-a-vis an amendment to the contract, We have to share that with the lender, and that can potentially cause issues from a funding perspective.
That fair market value, is there a situation where an appraisal comes under the paid price where they get to pay a little less property transfer tax because of the fair market value of the property?
Well, fair market value. And so, appraisals you get for the sake of your mortgage or approval might be different in terms of what the fair market value is. Ultimately, fair market value in the open market is what have two parties agreed to for this transaction. And that's what's documented in the contract. And so you can have that in an appraisal before or after, whatever that is, that's different. But ultimately, if the parties then agree upon a reduction, they amend it, then that's obviously the new fair market value for the sake of what that property is being conveyed for on that transaction. To your other point there, Taylor, and so what you often see, and this kind of ties back into the holdback issue we talked about too, is for various reasons, something has to be repaired, something has to be replaced, and the parties agree, it's just going to be easier. The buyer says, let me do it. If we agree it's going to cost $5,000, give me $5,000 and I'll do it. And so parties will do that. And if it's worded as a credit, the buyer will be credited $5,000 as part of closing for the sake of this specific thing. They're still paying the purchase price, the fair market value, what the property's been conveyed for, is still original purchase price, but it's treated arguably as an adjustment as opposed to a reduction in the purchase price.
And then how does that change your lending, Taylor?
Yeah, I've had difficulties with that in the past, lender to lender. And, one of them, again, came up at time of funding, but fortunately, we have great lawyers in the Okanagan, so we're able to get on top of it. But one comment that comes from lenders is...
I don't recall that one, Taylor. I'm thinking of that deal. I don't recall.
Yeah, that was at your wife's firm. Fortunately, they were pretty good too. They look at it as incentivizing the sale of a property. So lenders obviously don't want to see that, even though it's a very small amount. And then the other one that we struggle with, it goes back to that insured mortgage. Like if you're getting a cash back, essentially the lender, let's say it's on that 20% down payment, but you're getting a cash back. Well, you're less than 20% down because effectively the lender is financing a larger portion and you're walking away with less down payment. So I've had personally a harder time with the credits or cash back. So I always encourage the price reduction. Now, it's harder for the client, obviously, because they're thinking, great, I want a cash back of $5,000 instead of a $5,000 price reduction. They're two very different things because one, you have the money in your hand and the other, it just reduces your mortgage amount. So when you're looking at replacing like a furnace, it'd be nicer if it was done prior to closing so we don't have to deal with any of that. And then the other little caveat to all that is if there's a price reduction, the lender wants to know why there's a price reduction. If it's because of mold, oh my God, we're in a heap of trouble. Like now we need a remediation report and we got to make sure the lender is okay with it. So like, it's just a conversation that needs to be brought to everyone's attention sooner than later and, loop everyone in so we can not have those issues.
When a realtor does an amendment, should they write in there why they're doing an amendment? Because of the furnace? Or no, just $2,000?
I think for all parties, and Taylor, you kind of stole my thunder there, but you nailed it. I think there's a big piece of this is the communication, is that if there is something coming down the line, a reduction or an adjustment, whatever you want to call it, I think all parties, advisors really got to be on the same page for the exact reasons you brought up. And, on my end too, as a lawyer, and again, I bring up that dual role, we are acting for lender. Not to say we're trying to pull a fast one at all with the lender, but like really what we as a lawyer are always looking at when we get our loan package is what are the instructions? What is the lender telling us? And often, to your point, they are going to be very clear to say, we must be notified if there's a price reduction, or we must be notified if there's an amendment or terms. And so we're obligated at that point to notify them. And so to your point there, it can come as a surprise if on closing we realize that there's been an amendment or something's happened. And whether it's the lawyer not talking to broker or real estate, whatever way it goes, it's just important that we're all talking throughout the process.
I think that's probably the best point to leave this whole conversation on is, have the team around you, make sure everyone's in constant communication. And even with, like when I send you guys a commitment letter, I know that's like bare bones, right? Like I don't see the instructions that are sent. So it's obviously pages and pages longer. So yeah, for the client, have a good team, surround yourself with those people, and then just be transparent and, let the professionals kind of take it from there. Yeah, we're kind of running out of time here, Pat. Absolutely loved having you on, man. Thank you so much. Yeah, I'm interested into hearing more about the Chamber of Commerce as well and your guys' good event coming up.
Absolutely. I noticed, in closing, neither of you two are nominees, so we'll have to work on that for next year.
Yeah. Yeah, maybe I'll nominate Matt.
I saw the list of nominees on Castanet, and you got some good people out there for sure.
Fantastic all across the board. Absolutely.
Absolutely. Yeah, definitely.
Thanks, guys.
Well, thanks so much for coming on again, buddy. And we'll chat to you soon.
Take care. Thanks.